I wanted to make a video to follow up on the last couple of videos we did on patterns repeat, and we was saying in the last one that they can look a little bit different, but as long as you know how to label the structures, it doesn't really matter the way they look. Okay, they can look really big, like in this example, small, medium, doesn't really matter. And that's where staying focused to the pattern tells you a lot, and it's not just telling you what to do right now if you're in a trade. It on a bigger chart, it can tell you what to think about for the next week or the direction you should be trading in. So, from like this high right here, I know it got a little bit wild right here, but it doesn't really matter. After this low, we come up to this high. And I know a lot of people are trying to short this low. It's an obvious low, okay, and it's not a short level. Thinking if we break this low over here, this high is the high and it should continue down. That's too much of an obvious thought, and it really doesn't work. And this low being broken, we're looking for that to actually turn the market back to the upside. So it's really the opposite of what everyone else is thinking. And even if this was the top, the break here is not the beginning of it. You look back at a chart and let's say the price was down here and you say, well, that was the top of it. But that's the top of this move to the upside. It's not the beginning of a move to the downside. It's totally different. So we're not trying to catch this. If it was going to roll, it's going to roll more over here. And in doing it the way that we do it, we've been going long this whole leg up on the daily chart, not short. And I know it's, a lot of people are trying to pick the top, saying, oh, we're at resistance, but those are obvious resistance. And resistance is always going to be there unless we're at an all-time high, especially if we're day trading intraday. That's what we're doing. We're trading up to resistance, down to support on different time frames. So resistance, yeah, it's a valid thought, but it's always what happens off of resistance is important. And this level was calculated for a potential top, but it's what happens after it to be confirmed. Okay, so looking at this chart, once we get above this level, okay, it's on a pattern level, it's a 60-minute level to only be long. So, and this is the value of looking at a 60-minute chart, because if you say on a 60-minute I would be long up to next target, if we're not up to the next target yet, you don't want to enter short even on a day trade, even on a scalp for 2 points. Those trades are really better to be skipped. Because you're really probably going to miss the next expansion in the trend direction. So you might scalp it for 1.5 down, which is still going to be a choppy, hard trade to hold, and then miss 6 points to the upside. And even the 1.5, the odds are you don't even make that. Okay, especially if you're scalping. So just kind of looking back on this chart, this is the same level. Okay, came up, retested. Looks a little bit different. It's bigger on the chart in time. Here's a level, same thing. Here's a level, same thing. Same thing here. So it can be very small, medium. It could be bigger in time, bigger in price. Doesn't really matter. Okay. And we're always using blue bars and yellow bars and green, red off of patterns. It's pattern first, indicator second. It's really there to confirm the patterns we trade. And we probably look at the patterns a little bit different than everyone else, but it works for us. And in real time, it's easier to stay focused to really what's going on, the way we label them. So let's look at a 3-minute, and you'll see from, actually let's look at a 10-minute, so we have more bars here. So this is that line on the 60-minute. Once we break above this line, we are not trying to short back down. Okay, even though like this low is taken out right here, it's still support. Okay, just on the bigger wave. There was support here off of minor wave, support off of medium wave. So you're trying to, if you're trying to short, you're really in the thought process of if the market goes up 20 points, it's going to turn on one bar and go down 20 points, and really that's not the case. Very rarely does that happen, and only really intraday off of news. Still very rare. So we would only be looking to go long on a scalping basis, and even like a 10 and a 3-minute trade. So this is a 10-minute. bars stay green all the way up today, up to blue bars. Came down, we did spike a little bit higher at the end of the day. We're not really interested in that. So you can see 10 minutes all green. 3-minute from yesterday had blue bars at the low. We had blue bars here. It was more of a 10-minute move. How I was saying that minor into the medium. So it's more of a medium move. This is the smaller chart. So it went a little bit lower, by a point. So it's not even that big of a deal. But the same thing we were just looking at on the 60-minute happened multiple times today on a 3-minute. So we're breaking it down in the direction of the 60, looking to enter on the 3. But we're entering on a minor chart in the major direction. So we're trying to catch minor risk for major reward instead of trying to pick every little top and bottom on this chart. It's very hard to do that consistently. So we don't put any pressure on ourselves to do that. But basically we have the same structure here, and same structure here. So just like on the 60-minute, it's the same exact thing. Okay, so yellow bars caught expansion here, yellow bars caught expansion here. These yellows caught this first expansion here. So it's just important to, number one, learn the patterns in a way you can remember them. So when you're looking at a chart, you don't get confused. Then learn how to use them on 3 different charts. Because the 10 and the 3 are trading inside of the 60-minute, right? So, and the 60 minutes trading inside of the weekly and daily. So it's really breaking it down to have, bigger, medium, smaller outlook. But as soon as the 60-minute takes out a level like this, you cannot try to short intraday. So when you're looking at a 3-minute, if you're feeling like this is the top I need to short, this is the top, it's not a good trade. It's very low odds of success. It's really these supports should be bought, and it's just really calculating the support and thinking, is minor support or major support going to hold on this correction? But really the support always starts minor and could turn into major. Okay, just like at the top of a market, well, this is the daily leg on the, so this, and we do a nightly video every night and they're archived, so you can see, anyone in our group can go back to any day and see how we've played all of this. And it's really just sticking with this direction until it's broken. And then people say, well, how do you know when it's broken? We have a specific way of looking at it, but the thought is, even at the very top, if it pulls down, it's going to have a bullish pattern. Okay, and it's that bullish pattern that fails. That's just the beginning of the turn. So if you're trying to catch, thinking, okay, I see a doji there, that's the top, or there's a doji here, it's the top, and you're actually placing a bet on that thought, it's wrong. It's nowhere near confirmed. It's just that this is the top of this up move potentially. It's not the beginning of a down move. That would happen over here if it was going to happen. So it's really breaking this daily chart down into that 60-minute. Wait for the bullish pattern that comes up and then that fails. That's the beginning. So, and that's the same on a 3-minute or a 10-minute. It doesn't matter what time frame. But if you feel like you're trying to catch that exact bar, you're putting way too much pressure right then on that one bar and yourself. And just think, if I short here and this is the top, I'm still going to have to sit through the bullish pattern that fails. So even on a swing trading basis, the difference of shorting here or shorting at the proper place, it might be a difference of only 5 or 6 points on a swing trade. On a 3-minute, it might be a difference of only 3 or 4 ticks. So I'd rather wait and be more confirmed and give up 5 ticks intraday of profit potential, but have 100 more times odds of success in doing it. And I'm not promoting bad trading habits to myself in trying to pick a top. Because this top is just like this top on a 3-minute intraday. Doesn't matter the time frame. If you're trying to short here in hopes it goes down, in our opinion, it's wrong. No, I don't know anyone who has success trying to pick that top bar. And the same thing, breaking down that 60-minute into the 3-minute, everything is up. So I'd only turbo scalp long, not short. So you can look back on your chart, see if you can see the patterns and see how they repeat.